Hello, today is the 24th of July 2009. Thank you for joining me on the Endless Mountain Network. In this video I'll be going over some key economic news information that's been coming out. But I'd like to first thank YouTube and Google for allowing me to present these videos to you. I'd also like to thank all you people who have helped out by subscribing to my channel, rating my videos, commenting my videos, favoriting my videos, and for helping out by supporting my sponsors, which have links on my page and on my blog. Thank you very much. So I'm going to first start off by talking about the Federal Reserve for a quick moment, as I'm asking, do you think that the Fed should be audited? Recently on my blog, I put up a poll which asked, do you think the Fed should be audited? And the first 27 votes have 25 yes, with 1 no and 1 not sure. So, I mean, wow. If you would like to make your vote, please do so on the blog. All the links are in the more info, including the blog and all of the stories. First story, Warren Buffett is saying to buy stocks. He told CNBC that the economy still isn't showing any signs of life, but that doesn't mean investors should stay away from the stocks for the long term. In a live interview on Squawk Box this morning, Buffett says business is still flat, but he stresses that doesn't mean he's negative on stocks, predicting the market will revive before the economy does. The market is very, very likely to turn up before business, but I don't try and time stocks, I try to price stocks. He also says that even with the Dow hitting highs for the year around 9,000, Buffett repeats his belief that stocks will outperform cash investments such as treasury notes over the long run. Okay, just going over quickly over this video. First off, he is saying that stocks are going to be a leading indicator before the economic conditions. And what that makes me believe, as if this statement happens to be true, is what they're trying to tell us is that hyperinflation is going to bring up the stocks. And maybe we might have a stock crash beforehand, maybe not, but nonetheless, in my opinion, if you're holding stocks, I really do think that you are going to be losing as far as buying power. And I'm not just saying for American, but realistically, all the other countries in the world. However, I mean, some stocks may do you well, and the better you know how to trade, of course, you can do very well too, because in my opinion, I think a lot of people would be better off to have game plans set for when they plan on taking money out of their investment portfolio, as the dollar does have a serious crisis ahead. I've been talking a lot about it. The mainstream really doesn't talk too much about it. In fact, Buffett, he was even saying there that he expects these to do better than the bond market. Well, of course, the bond market's doing terrible. It's almost like saying, well, you know what, the San Diego Padres in baseball are better than the Washington Nationals, which these are the two worst teams in the league this year, and by far Washington being the worst. So that's pretty much how I'm comparing it on that. And even if you wanted to invest long-term on stocks, which is something I don't recommend you actually buying stocks and really buying call options for long-term options like 2011, 2012 calls would be, in my opinion, a much better play. Instead of putting down, like, say, $25,000 on stocks, put a percentage of it down, like $3,000, $4,000, $5,000 on options, which then gives you extra money to tie up to buy real assets such as like silver and gold and food and maybe backup power generators. These, to me, are the smart investments, are stuff in that nature there. Any type of real asset in which you feel you're going to be able to use over the next half decade, along with assets you realize you can be able to have other people use, whether it be for trading to your family for love or something you want to trade on a barter system. That would be the best recommendation that I can give. I see stock markets more of like a casino type game. I mean, if you want to gamble and put a lot of your money down on a casino, heck, go right ahead. Now, I'm going to bring up this chart here. What this chart has is it shows the Dow Jones from both the 1929 period and the one we have before. This bottom in which I have circled was the big bottoms they had before the big, after the big crash, that is. So in 1929, it bottomed at that closing low of $198.69. where in March it had a closing low of 65.47. So what I have done is I divided the two numbers together, which is 32.95, and I took all of the results in which 1929 had, and I times it by 32.95. And what this means is I have the last 127 trading days in the rally sense. And this rally that we're having now is very similar right now to the rally we had back then, but the rally we had then ultimately failed really big, as it managed to get from 198 to 294, gaining almost 50%. Right now the Dow has gained 39% from its last closing low, so it hasn't quite done as well, but nonetheless, back in 1929, it took only about less than 6 months for them to retest those previous lows and take them out, and eventually it went down to 42 in 1932. Now, I'm not saying that the stocks are going to do the same thing, because it's a totally different time. Back in 1929-30, they weren't printing all of this excess phantom money and inflating the dollar back then. So totally different types of scenarios, which is why if you're looking at stocks, I really do recommend looking at the inflation-adjusted chart, which can give you better indicators towards the stock market, in my opinion, anyway. The next article, the Bank of Canada says an economic recovery is happening. This came from Julien Beltrame, most likely pronounced the name wrong, but nonetheless, the Bank of Canada is declaring the recession essentially over, saying Canada's economy will begin growing this summer after 9 months of stagnation and led most of the industrialization world next year. The rosy assessment, despite numerous cautions, rippled through the markets Thursday, lifting the loonie and many stocks. We believe the economy will grow this quarter, Bank Governor Mark Carney told a news conference. Things are unfolding a little faster in terms of the recovery in consumer and business confidence and financial conditions. However, experts say the renewed growth after 3 quarters of economic shrinkage, 2 straight declining quarters, is the technical definition of a recession. This won't lead to job growth until much later, when companies regain confidence and began hiring again. Carney also issued a caution that recovery is not a foregone conclusion and that the economy remains dependent on massive government stimulus and his own condition pledge to keep the policy interest rate at a historic low of 0.25% until mid-2010. Without such interventions in Canada and around the world, economies would still be spiraling downwards, he said. Well, there's more to these articles, but nonetheless, they're saying that they're going to need all of this massive stimulus money, which I've been saying so long is like giving a patient in pain medication at severe amounts. And quite frankly, I do not agree with what they are saying in here, as they are saying that they're going to need to see consumer and business confidence regain. Well, how are we going to do that? I mean, we're seeing all of these companies who are having better than expected earnings, and a lot of it has to do to cost cutting, and this is not a good long-term plan. It's actually going to most likely make the problem worse when you do a lot of these cost cutting. Another interesting article that I seen on CNBC, they showed the top 10 reasons for the economic slowdown. Now, a lot of these have different graphs and some old different videos. I'm going to go through the top the 10, at least from 1 to 10 in the order they had, and explain the last one. First one, Greenspan's cheap money, the great housing boom, subprime explosion, inflating the bubble, warning signs, housing market decline, banks go into panic mode, financial collapse, global recession, and then massive government action. And what they said on the massive government action is the initial $700 billion economic stimulus plan authorized by Congress was only the tip of the bailout iceberg. Between October of last year and June of this year, the U.S. government committed more than $10 trillion to economic recovery packages. In that 9-month period, the federal government took aggressive, unprecedented action using new and existing powers to shore up the markets and First off, I want to come out and say $10 trillion. I mean, it was just recently the national debt was about $10 trillion. So they've pretty much doubled the money supply since they started the stimulus package back in October. And you might say, well, shouldn't inflation already come into play? Well, inflation really does take time. It's just something that doesn't happen immediately over and over. If that was the case, well, gold back in October, which was like 800, should be about 1,500 or 16, but it's not. It's about 950, which is really why I'm so big on commodities and gold and so on. Silver is the biggest one that I love. But not really the ETF funds, because if you were to play like the GERALD for gold, the SLV for silver, or any commodity stocks, essentially what you were doing is gambling in the casino, like I was mentioning with the Dow. I pretty much talk about the real commodities, buying real gold, real silver, whatever it is that you find in your best interest. Everyone is different based on who they are, who they know, and where they live, and of course how much money they have, and what they pretty much already have. Some other stories: minimum wage has been set to $7.25 an hour, and I've already done a video explaining that. Really, either way, the economy's going to go in trouble. If they bring up the minimum wage a little bit, that's going to cause more businesses to go under, especially the mom and pop businesses, because the Walmarts and the McDonald's, they're already making a ton of money anyway. So that's going to cause a spiral down, and if they lower the minimum wage, then people are just going to be so broke anyway that having minimum wage jobs aren't going to do anything either way. So no matter what they do, it's not going to help the situation anyway. I also got a video, Jesse Ventura standing up for the people on standing up from the people on Fox. That's a very amazing video. And GERALD CELENTE is predicting the revolution. The video that is in the more has got 500,000 views already, and it's an old video. And GERALD CELENTE is predicting a revolution, and what he does is he uses current events to form future trends. We also have WebBot that is predicting this revolution, and how WebBot works is it takes keywords from the internet with a lot of advanced scripts. And I've been predicting a revolution for quite some time also, and the reason I do is I look at the consciousness of the Mayan calendar. This revolution has already started, but it has nowhere near gotten into a higher gear. It pretty much started with the April Tea Parties and such events like that, but you can expect a lot more to happen, and most likely later this year to earlier in 2010. And the reason why I'm using that time frame is that's when the Mayan calendar, which is what I use, will have a consciousness level where it makes the most sense, because this is where we go past a halfway point of a major cycle, which is when I would predict that to happen. So when a revolution happens and you have money in stocks and equities, as GERALD CELENTE says, your dollars in nominal numbers is safe. Maybe you might only be insured up to a certain amount and you have more. You will definitely be safe for what you have insured. I think it's $250,000. I don't know if it's higher. Nonetheless, that doesn't mean you're going to get all your money all at one time. And of course, the buying power which you have may not be the greatest. For example, if Warren Buffett happens to be right and buying Dow at 9,000 is correct, because we'll say at Christmas or at Easter, the Dow Jones is at 13,000 and you've already seen a nice additional 40% gain. If inflation has like doubled or tripled in that time, it would not be a good investment, where if you had bought, say, silver or gold or food or whatever, you would have been able to trade these assets for definitely a good value. Say you were to pick up, say, $500 worth of canned foods and then turn around and trade it, you would have been able to get back maybe 4 times your dollar value, where you wouldn't do that with stocks. And if you were to buy goods that you normally are going to use anyway, the prices which you bought them before at $1 might be $3 or $4 now, so you would have had the better price. So that's why I'm saying real assets are definitely going to be a better investment. At least this is what my opinion is, and I believe it's a highly educated opinion at that. So I'd like to thank you for watching this video. Once again, thank you for all the comments and ratings. Have yourself a great weekend, and take care, everyone. Bye-bye.